is the last week of the year, and the way Shriyansi marked it, yes, it was a record year for US markets also. Nasdaq gained more than 30% this year itself. But let's talk about how did markets reacted on Friday as well on Thursday. Of course, it was a truncated week. It was a holiday shortened week last year. But then Dow, that one erased earlier losses and squeezed out a small thinning gain in the trading day on Thursday. Market did make a strong comeback. In fact, the kind of gains we saw at the start of the holiday week. Dow closed the day with a minor gain. It was just 0.07. Closed at a level which was higher than 43,325. Lost about 182 points earlier in the sessions. S&P dipped about 2 points. That was marginally flat to negative at close. And Nasdaq also ended the day lower by falling more than 0.1%. So markets closed marginally lower on Friday. But then, yes, the benchmarks are headed for a winning fourth quarter. This year has been a record year for US markets, not just Nasdaq, even for Dow and even for S&P. Let's talk about bond yield also. Bond yield have been hovering around the same levels from last 7 months. It did rise 7 basis points and it closed higher than 4.6% last year. But then let's not forget, this is the last year, and the kind of gains we've seen on US markets and even in Indian markets. We've seen record highs on Indian market this year. This year has been spectacular, but then let's see how things fare out for the coming year now. What about oil, Shriyansi?
Well, absolutely. When on one side you do take a look at Wall Street, and you do have that fourth quarter being almost ended on a very strong footing. But when you take a look at oil prices, they settled more than 1% higher and recorded a weekly gain also coming in low trading volume ahead of year-end. Now, this is a period that is marked by typically low trading volumes because it is a truncated week on account of a couple of holidays coming in, even for the oil markets. But you do have oil prices buoyed by a larger than expected drawdown also coming in from the US crude inventories last week. So even that is something that the market is looking at. When you take a look at price levels though, Brent crude futures, you're looking at an uptick of 1.2%, $74 a barrel is the kind of level that you're seeing, at least for Brent crude futures. And when you take a look at US WTI as well, an uptick of 1.4% or $70 per barrel levels is what you're seeing there as well. Now, on a weekly basis, both Brent as well as WTI also gained about 1.4%. So similar moves coming in on a weekly basis for both of these benchmarks. But when you take a look at US crude oil inventories, like I mentioned, fell by 4.2 million barrels in the week ended December 20th as refiners did ramp up activity, as well as the holiday season also boosted fuel demand. Now, this is something that has been quite a relief coming in, especially for the last couple of weeks. That's the kind of trend that we've seen, at least when you take a look at US drawdown as well. And you do have that sort of perk up coming in from demand right there. But when you take a look at the World Bank and the forecast that they had for the Chinese economic growth in 2024 and 25, even they're sounding quite bullish in terms of their forecast. They're raising their forecast, and on the back of that, you do have that also providing support, at least when it comes to oil prices. When you take a look at gold on the flip side though, you do have gold prices slipping as you do have US Treasury yields that dimmed non-yielding yellow metals demand as well. So you do have the appeal for gold taking a hit right there, Priyanka.
All right.
If you like this video, then like, share and subscribe to ET Now.